Well, welcome, Mr. Okere, and thank you very much for giving us the opportunity for having this conversation. I just wanted to ask you a few questions about your opinion on the development of new technologies. So, to start, in your opinion, what's the impact of digital transformation in the financial sector?
Thank you, Ma. I think that the financial sector has been traditionally the way it's been for centuries. Also, this has been because there is the regulatory protection of banks. So there's been very little intrusion or disruption of that sector because of this protection. It's very difficult to get a license. And so the banks have carried on with very little innovation. And they've also carried on with a lot of working adult population not having access to open a bank account. So obviously this cannot continue, and therefore I feel that the opportunity that mobile phones and broadband have brought to empower those that were hitherto neglected from that value chain is going to pose a challenge, and is going to bring up a change, the magnitude of which probably will be the same as we saw in the retail sector being uprooted or disrupted by e-commerce, a change similar to what had happened in ride-hailing with Uber, more or less disrupting the traditional way that rides were hailed, or even the way Airbnb has changed the way that rooms are booked, before the way the hotels were doing it. So what is the scale of the change? I feel that the scale of the change is going to be big, because now we are going to find that there are telecoms companies that have gotten into financial services rendering through mobile phone, and especially with the advent of digital currencies such as Bitcoin or other cryptocurrencies. And the way they've done this is on a peer-to-peer level. So what they've done is designed a system that people can make loans and take loans without third parties, nor without a central authority in mind. And this is catching up very, very, very fast, especially in emerging markets, and also especially in Africa and China. So we are geared for that change, and there's nothing that can stop them, because this is a peer-to-peer system that doesn't have any central authority like a central bank in mind. So there's nothing stopping them.
So based on what you just mentioned, do you think these new technologies are going to be a threat or an opportunity for the financial sector and the financial institutions?
Well, this new development is going to be both opportunity and threat. Actually, the Chinese use the same character for opportunity and threat. Wherever we see a threat, there's an opportunity. What has to happen, obviously, is that the banks have to change the mindset from we win when you lose. You know, for instance, if you're late on your credit card payments, the report by the Financial Services Authority in the UK shows that for every pound you've borrowed, you're going to pay £2.50. That is way too punitive. But if we then look at the cost savings and the optimization that the Fintechs are bringing to financial transactions, and if banks can then adopt some of these technologies, either by collaborating with Fintechs, then obviously there is a win-win, and then the opportunity is even magnified. The way it is now is as if the banks are the old people, and then the Fintechs are the challengers.
Okay, so you've mentioned developments in other areas. You've mentioned developments for example, in the hotel industry, booking through Airbnb. And so, in your opinion, what are the business developments that we are going to be seeing in the financial sector?
I think that the opportunities are going to come from the whole gamut of people that are not banked. In Africa, for instance, 70% of people don't have bank accounts. Now, that is a big opportunity to tap. The banks typically go for big companies that are established, but the small companies and even people that are cash workers also need banking services. And this is where the big opportunities lie. If you look at what has happened in China, for instance, Ant Financial, which is belonging to Alibaba, has a market cap of about 60 billion. This is just about the same as UBS which is the biggest bank in Switzerland. So they are at par. In fact, if you go a bit further, Yobo, which is 4 years old, also belonging to Alibaba, their money market fund, has 165 billion in it, bigger than JP Morgan's money market, US money market fund, which is just 150 billion. So you see a whole lot of opportunities that are being taken advantage of by new players.
Now, looking into Africa, how do you think is going to be, the market is going to be transformed in Africa?
The technology is available and it's been proven by M-Pesa in Kenya. M-Pesa now provides financial services and is accounting for about 44% of Kenya's GDP. The challenge, though, is that being a financial technology company run by Safaricom, they are regulated by the Communications Commission of Kenya. Here is a big bank that is not within the purview of the central bank. And because of that, many African governments, especially Nigeria, were worried about fintechs that are going to become big banks not regulated by central banks. So in Nigeria, what we did as CWGPLC, which is my company, partner with MTN, and then we had a bank-led model. So you have Diamond Bank, which is our first bank that came onto this model, and they were able to sign 6 million additional customers just in 1 year. It took them 23 years to sign 7 million. In 1 year, they had 6 million more. So that model works because then the whole entity is regulated by the central bank.
So in closing, what is your vision of the financial sector in the next 5 to 10 years, particularly looking into the demands that the new digital customer is going to put on the table to those financial institutions?
I think what is going to happen is what I've developed in a model called the Austin Okere's 5 forces model for analyzing the future of banking. And the 5 things are 1, the banks, 2, the fintechs, 3, regulation, 4, the customers, and 5, the currency. Now, if the customers are digital preferring cryptocurrency and so on, then of course the currency is going to be digital. Therefore, the fintechs are going to be winning. A lot of millennials don't touch money. It's all digital. So it's clear that that is going to now have a situation where banks are going to tend more towards fintech-like, and the regulation is going to be the Communications Commission. On the other hand, if the customer wants to have the same money as today, then of course the situation is going to remain, and then you're going to have banks the way they are, and then you're going to have central banks that are regulating them. But you can also have a combination where the banks imbibe the technology to serve not only the top of the pyramid, but also to serve the bottom of the pyramid together with the fintech. And therefore, it becomes bank-led, and then the currency is digital, but the regulation is done by the central bank.